Sofi update here on the 17th. I know it's morning time there. I'm still over in Asia, so it is late on a Saturday night. I'm actually back early, so I thought I'd do a video on SoFi and just go over what happened over the last couple of days. So in the previous two videos, I was talking about this gap up here at 710. We came 2 pennies from hitting that. Let's zoom in here a little bit and just look at the overall move. So I still think that this is an ABC move. You have your A wave right here, B right here, and we're on the way to completing the C wave. The max target for the C wave is going to be up here at the 1.61 fib at 732. So 732 is the max target. It could end here. It could end up here. If it were to break above 732, then potentially it takes off. But again, the structure is not really there. If you're looking for an impulse move, you want it to be like this. We are making a basically like a 45-degree angle. So we want to see closer to 90 degrees up here for a impulse move. So this is a very corrective to me. And then you have this demand zone right here. Let's look at the moving averages as well. It is actually above all moving averages, so that's pretty bullish. But the thing is, with the moving averages, it really doesn't matter with SoFi. With other stocks like tech stocks, pay attention to it a little bit more, but SoFi is so manipulated that it doesn't really matter. You can see here, these swings, the moving averages don't matter at all. We have a huge move up here, back down below, big move, back below, big move, back below. So I don't really take into account that much the moving averages. We can go kind of eliminate that. One thing that I think does work really well is looking at the standard deviations, and it's another reason why I think we have a good chance of coming down here to 550. You can see here we're at the bottom of the standard deviations, and now we're getting towards the top. In the past, we've made it to maybe 3 standard deviations, which again, if that's 3 standard deviations here soon, that's high 7s. But you can see here, -2 standard deviations hits the 550 gap fill. So that's another reason why I'm favoring this pattern right here over the next probably month or two, probably going into earnings. And I know a lot of people are saying there's no way it's going below 6. Well, if the market doesn't correct, then you got a good point. It probably won't go below 6. But right now, just looking at the structure of this move, I still think it favors this hitting new lows on a market correction. One good thing, though, is that tech stocks and SPY, they look like it could potentially turn into an impulse move. If we look at IWM, IWM looks to me, still looks to me like it is about to start a C wave down. So we'll see how that plays out, because right here you have an A wave down, and then you have A, B. So this should be the C wave right here. And I think that this makes a lot of sense right here. I'll show you. 1, 2, 3, 4, 5. So you have A right here. You have B right here. And there's a very, very slim chance that this is the completion of the C wave. Actually, my minimum target would be minimum target's actually 186 on IWM. So Another reason why I have SoFi going to new lows. So you get this impulse move down, and then we get this corrective move up. How do I know it's a corrective move? You can just look at parallel lines. This is a very, very sideways move. And look at that. We're not even close. So I 100% stand by what I said. And this is likely wave 1. This is wave 2. And you can see where this could be going. This is monthly demand down here at starting at 180. So I just said that the minimum target was 186. The 1.61 fib is at 180. Pull back, another move down like that. So that's what I see in IWM. And SoFi, again, I think that it's more than likely has another leg down. I showed you all the reasons why I think that. So I know that people are going to say there's no way it can go below 6 again. I mean, we've been saying that for a long time, that it can't do this, it can't do that, and it always ends up doing that. It always ends up going to new lows. When it was up here at $11 and I called a correction down here, everyone was saying there's no way it's going below 8. So again, I would be very cautious here. We'll see how it plays out. It's still possible that it breaks out if this invalidates. Like, if this overall move were to invalidate, then it's possible that it doesn't come down here. But I would say the odds are that we're coming down here and probably hitting 550 to $6. So I'm going to leave it at that. Let me know in the comments what you think. I know there's going to be a lot of people saying there's no way it's going to happen, but we will find out here soon. And we have earnings in October, I think, so we have about 2 months for that. We'll see what happens, but that's my take on it right now. And I don't want to be bearish, but it's good to know what is a very good probable scenario so you can hedge. So you could potentially buy some puts or sell some covered calls up here. Again, I was saying 710 back here. I know it's not like a crazy call or anything like that, but that was the target the whole time. This box is going to be resistance. So I'll leave it at that. Leave me a comment, like, subscribe if you're not already. And that's pretty much it. I am going to start adding a join button to the channel. The basic one is just to support the channel. It's like $2.99 a month. You get like emojis, you get priority comments, and then I'm going to do some maybe member only videos. And then I'm doing an advanced one, which the advanced one's going to be free personalized charts for any stock, and then a personalized video, like one a month. And there's gonna be some other stuff too that I haven't got it completely thought out, but I'll see. That'll be probably added here within the next couple of weeks. So that's pretty much it. Leave me a comment, like, subscribe, and I will catch you in the next video.